Hi, this is Randy Finney with Right Side of the Chart, and this is a market wrap for Monday, October 29th, 2018. Another interesting day on Wall Street. We had the Qs down about 2% with a nice recovery at the end of the day. I'll get to SPY in a second. But a couple of things to note. I plan to follow up. Most mornings I've been doing a separate video for just members of the site with market analysis, anything to point out on trade ideas. And I plan to do that tomorrow, if not later tonight. I have to say today was a extremely busy day. And for members of the site, please know that my absence in the trading room, I'm usually there all day, actively answering questions, usually within, an hour or less, if not immediately. Today, busy day. I had to focus on the charts, my own trading as well. It's been, just an excellent trading environment recently, and I'm doing my best to get back to all the questions on the site. In fact, to help streamline things here, I've taken the free trial period on the site down to 1 week from 3 weeks. There's so much activity, so much volatility in the markets now that in 1 week I'm posting more content than I usually post in a month or so. And that's the nature of the markets. It's not anything new. Been here before. When you have these volatilities, these swings create a lot of trading ops, and there's just much more rapid developments. As we grinded higher in 2017, day after day, sounded like a broken record. There were no significant technical developments to note. Market inches up to new highs, but without any breakouts or impulsive. This is where swing traders make their money. Here, and of course, on the downside, we're short now, and maybe on the long side. And that brings up another point that I just want to start out. So again, I will follow up with some more thoughts as to do we bounce from here? We very well may. And finally, we saw some things which I'll get to here in a second. One of those being over the years, and I can tell you many years. I've been running the site now for over 6 years, and trader long before that. It is amazing that when on days like today, you have a sharp move. When I have price alerts set on the trade ideas or my own trades that I have, orders to close, whether it's a short and I have a buy to cover sell limit order, or it's a long and I have a sell limit order to take profits, it's like popcorn. When one goes off, they all go off. I was getting a bunch of alerts, and I mentioned it in the trading room at the time. We had 3 price targets hit today alone, all within very close proximity. I mean, within probably minutes of each other. Our SOSX trade, that's the 3 times short, leverage short on the semis. We hit that today, our first target for 16% profit. From there, we still have that as an active trade, and we may get a bounce, and I'll speak more to that on the site. But I want to show you here what happens. And I talked about this just last week, that when you're shorting, especially in a strong sell-off, or just about any sell-off, because shorts or the market, stocks, sectors, etc., tend to fall a lot faster than they rise. And so you have to be quick. I said you can't stay too late to the party. So here's SOXX. We hit the price target almost to the button today. I mean, right there. And then reverse. I just wanted to show you how quick these reversals can be. If you were trading, you probably saw this today. But this is the last 15 minutes of trading. That's the 345 bar I grabbed. That's right when our price target was hit, right at the highs there today. And SOSX fell 5.33%, over 5% in 15 minutes. We also had our first price target on QQQ hit as well today. And QQQ, same story. We had it hit almost to the button, right at right at the price target we're talking within basis points, and it reversed. And as I always say, the reason that there are multiple targets listed on some trades, many of the trades, each target level is where I expect a reaction. And again, when you have a fast moving market, very oversold, things can happen very fast. That was a 2.27 reversal in the last 2.27% reversal in the last 15 minutes of trading on QQQ. End of day, we still closed down 2%. So keep in mind, like I say, this is just the trend that we've seen lately. These powerful intraday rallies, dip buyers stepping in, high frequency trading exacerbating these moves. And you have the high frequency trading machines, they jump in front of each order and they'll skew it, they create these swift moves to the upside and the downside. And then finally, we also had our Netflix second price target hit today for a 24% gain. And keep in mind, that's the second trade, official trade this year on Netflix. I'm going to pause this video. Okay, I wanted to pull up the Netflix chart without the one that I have the price targets on. We shorted Netflix twice this year as an official trade. Right there, we waited to the day. This was an earnings miss right here, or at least a sell-off. Waited and nailed it right at the bounce back to that gap backfill. Shorted it, wrote it down to about right here. Covered, got out, and I actually reverse long. Personally mentioned that on the site, but closed the official short trade out, and then we got it again. Was it right here recently? And then again, I mentioned back here, what it was is this level, that big gap, a very well-defined resistance level. So there's been, 3 great shorting ops, all pointed out on Netflix right off this level. And, but here's the point I'm trying to make. 1, 2, 3. We don't have, I have a ton of unofficial short trade ideas. And if you're a member and you're not a member, the difference of official and unofficial, well, official trade ideas, I take the time, and it is very time consuming to mark a chart up, list explicit price, entries, the buy or sell triggers that will trigger the entry, specific price targets, which are adjusted for an optimal fill, meaning on a short, I'm going to cover a little bit above support in case the stock reverses there usually. And then there's always follow-up posts made every time a target's hit or if a trade is stopped out. So there's 20 or more unofficial trades for every long trade. But so we had a handful of official shorts, and 3 of them today hit their price targets all within close proximity. What does that mean? Well, there are most often, the majority of the time, an official trade hits a price target, one of the official trades on the site. I put those target levels there for those active traders that want to game a bounce. If it's a final target, that's where I think that the move will end, whether it's a long or a short. But on the swing targets like T1, T2, first, second target, that's where I expect a reaction. A reaction I define as one of 2 things, either a bounce or a consolidation around that level. So we'll see tomorrow. I wanted to point that out, that we did indeed have some pretty powerful reactions off all these stocks today, or those 3 trades. Netflix, look at that reversal off the lows. What is that? If I can grab down here, that's about a 4% reversal. I just showed you SOXX and QQQ. And again, the common theme was a lot of things that I follow had also hit support here. Okay, so there's QQQ. Now that target's been hit. The target was 160.78 on QQQ. So you can see it hit that level and reversed. Now, the point being that a lot of things fell to resistance, as well as the semis. They hit the first target, and that was a key support level as well on SOXX as well. I had SOXX, the non-leveraged one-time long semiconductor. That was a sister trade for those that didn't want to go with SOXX, a leveraged ETF. And that one hit the key support level to the button. So here's where I'm looking at. Yes, I've made the case, and this market could still melt down if we continue to see forced selling, as I talked about in the video earlier today. If you didn't watch that one, I would highly recommend it. I talked about a fundamental case. This is all technical analysis. Everything I'm talking about now and what I usually cover: chart reading, looking at support resistance levels, volume, divergences, all that good stuff. Fundamentally, I made a case where we could see, a big swoon down in this market. And so far, despite the reversals today, it didn't help much. We're down 2% in QQQ, although, when I did the video and I'm talking about pension funds and hedge funds and all that, QQQ is very tech heavy. I can guarantee you CalPERS, who I used the example today, the California pension, retirement plan, I can guarantee you they're not chock full, loaded up to the gills in QQQ and those heavy FANG stocks. They're more diversified. And so SPY was down only a 0.5%. It was, of course, down a little more earlier, but you can see also coming up at a pretty decent support level that I've had here. We reversed just shy. And then I want to show you something. Well, before we leave the daily charts, let's not forget we're still very oversold. And we also have, we still have those potential bullish divergences on the RSI. We don't have any divergence on the PPO, but sometimes all you need is a RSI divergence on the daily. And then when I go down to the 60-minute charts, there's what I wanted to point out. You remember I was talking about these divergences from back here, potential I called it. And my expectation would continue lower and these divergences would just simply expand and continue. So they're still intact. PPO is poised to cross down, but what I'm looking at here is this is the this is one of the more bullish candlesticks I've seen in a while on a 60-minute time frame. Again, this is not the daily chart, and this could be overridden, but look at that doji right there. Look at that hammer candlestick right there. That's pretty powerful. Nice reversal stick. Bulls still have their work to cut out for them. Let's see if they can take it up. Again, we watched the golden trend line, I call it. I colored it yellow and SPY and QQQ. I covered it in the video again this morning. This was today's highs. Once again, another failure at that level. So this is what SPY needs to take out. The Bulls, they had the potential to do it today. They ran it all the way up there and they just couldn't pop 270 plus that downtrend line. So now if they come on up, they certainly have their work cut out for them with a lot of resistance levels. But I think if this downtrend line gets taken out, as well as the downtrend line on QQQ, because today's sell-off was more about tech. I always keep an eye on the 11 sectors of the S&P 500, and sure, quite a few were down, but financials were up pretty strong. XLF closed up 0.87%. REITs and other things, but REITs don't have a big impact on the a big weighting, but we had, XLP was up 1.15%. So there's some sectors that show they were holding up. And again, it was tech. It was all about tech. Tech is broken, and that's not going to be forever. Tech prices are starting to get down to a level that even though I think we're going lower in the coming months and next year, we've let a lot of hot air out of Apple, Amazon, Facebook, and all those so far. XLK was down another 1.69% today. So here's QQQ. Look at that's a big bullish green candle on the 60-minute chart. And this is not a daily chart, but again, that's pretty powerful stuff right there. There's the divergences on the 15-minute. They show better on the 60-minute chart here again, which is a more significant time frame. There it is. So that's the 60-minute chart of QQQ with that hammer candlestick there. And that's pretty powerful stuff right there when it comes to the low. So if we can get up above there tomorrow, rally up here, test these trend lines, maybe a breakout. QQQ certainly has some work ahead of it to get up there, just to get up there and rally. Let's say it took about this long to get there. It's about 4%. But again, we're really oversold. These divergences could be the catalyst for that. I'll follow through tomorrow with some additional thoughts. Because again, what I like to do at this point is I really do a deep dive into the charts. I want to drill down to at least the top components in QQQ, not all 100, but if I go over the top 10 or so, that represents about half the returns right there of the index. So that's all I need to cover there. SPY, I'll do the same thing, look at the top components, many of which are the top components of QQQ anyways. I'll look at the mid caps, small caps. I'll look at different sectors and give you my opinion. But let me say this right now. It was a busy day. I did my best in the trading room to answer questions. I get quite a few questions today when we were down big before the reversal. Randy, what do you think about shorting this here, the healthcare stocks? What do you think about, going along the VIX? And my answer was, there's certainly still the potential for, even more selling as much as we've had. I know that's a heresy to some, bulls that think this market's going to go forever, and I know the fundamentals are strong now. But A, we don't have to have that, and B, we're extremely compressed. I talk about that rubber band analogy where you can stretch it so far. The more you stretch it, the harder it's going to snap back, unless it breaks. Now, if it breaks and we get a waterfall sell-off, we could punch down and be down, one day 7% or more. Circuit breakers may try to slow that down, but there's certainly the potential there if we have a ton of forced margin call selling and a lot of these institutional funds have to continue to unload. Remember, we've hit that point now where I think it's pretty clear to the dip buyers, and I talked about in today's video, there's a lot of evidence that shows throughout this move down so far, these big sharp counter trend rallies, a lot of the evidence points to that it was from retail buyers, aka, no offense, the dumb money, whereas the smart money, i.e. institutional buyers, were not stepping in and buying those dips. So what I'm getting at here is So we're starting to see demand dry up. If the dip buyers just stop buying altogether, and today's action certainly looked bullish at the end, as have we've seen a lot of reversals that look pretty bullish on face value, but then there was no follow through. So again, there is the potential tomorrow for follow through, and the farther we go down, the more stretched that rubber band gets. And the point I'm trying to make is if there have been a lot of opportunities to short over the past few weeks, and I understand there may be another 5-10% or more downside before this whole thing is over, but maybe not. You're just as you get lower and lower, the risk reward ratio is no longer favorable. If you followed me for a while, you've heard me in God knows I had my share of heckling in the last, few months here when the market was going up and up. And my thing was, when I didn't have sell signals, I made it clear. I was laying out bear scenarios, looking at these weekly divergences and daily divergences that are now playing out, but I wasn't shorting that whole way up. There was certainly some short ops that I took and short trades. But as far as swing shorts, we didn't have any sell signals till we had these breakdowns recently. And the point is, what I had stated is, the market, the trend was up, the trend was bullish, dips were getting bought, but the risk reward was not attractive at all. And I made it clear the risk reward was skewed to the downside despite the current trend. Most people can't get that. They get wrapped up in the fact that it's an uptrend, you must buy, you must buy, you must buy. Just like in a downtrend, you must short and you must short. No, there were plenty of ops to short. You start shorting now, you get caught if the supply demand dynamics are still favorable. In other words, if there's enough cash on the sidelines, despite the fact I said, some of these mutual funds and pension funds may need to unwind, but if they have cash to deploy and there's another wave of buyers out there, people that are waiting to get back into Apple and Amazon, and you see the market start to go up, you can have an explosive rally to the upside. Last bear market, I had a field day trading the bear market rallies because as much as I say I love shorting stocks because they fall a lot faster than they rise, the only other thing that's just as beautiful is a bear market rally because stocks explode to the upside. And the reason is you have two components driving them. You have the shorts that are getting squeezed, the ones that stayed too late to the party, they have to cover. The higher you go up, the more pain they get, the more they come in and cover. Remember, a short seller is the only guaranteed buyer in the stock market. You may talk a bullish talk. You may say the market's going to the moon. You may have $3 million of cash to deploy, but you don't have to buy a stock. For whatever reason you don't feel like stepping in, your rhetoric might not match your actions. Short sellers must cover. If I short a stock, I have to buy that stock back. My broker will cry, I have to close the position out. And so that's when you have a high short interest, the higher short interest gets, it's fuel. It's tinder for a fire, and that just needs a spark. And when that spark gets lit, those are short covering rallies, and they're explosive. These were just corrections right here with an ongoing bull market. This one's starting to get pretty stretched, so I'm giving a warning here. That's it. And I know, on one side, I'm making a case there could be another 5-10% downside in the market, but when you if you didn't get in early, and it's okay if you have a position, you want to build to it, the semis, tech stocks, anything else, at least you have some gains there to absorb it. But if you're shorting now at these levels, you can do it. You just need to keep your stops relatively tight and watch out for those reversals. And if you're doing it with individual stocks, remember, or ETFs, unlike futures, you have the potential that the market can gap up really big. You can have a 2-3% plus gap to the upside if you're short, or even to the downside if you're long, and that can bypass your stop loss order. So you just got to be careful. That's all. The way to do it, in my opinion, if you're going to do it, keep your position size relatively light. The market's swinging 2 to 4% a day right now. Where back here, you would be lucky to get 2 or 4% in a week or even a month when the market's just slow grinding like this. So you can risk a little less and still make the same amount in dollar terms. And so by having a little less, you sleep at night. You're not every swing that goes against you, all those sharp swings don't make you second guess your trades and shake you out early. So the proper position sizing, course diversification, and then using stops. And then finally is not staying too late to the party. You have to identify your price targets going in, and 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 if they get there and that's your target, you have one of two options. I mentioned this on the site today as well to to answer that question for anyone wanting to short. Is there's a couple things because we may get that meltdown type scenario in QQQ. Let's just jump out to a weekly chart and then we'll wrap this video up. So here's that selling so far. It's pounding week after week of these red candles, and we're still going down. And again, we haven't seen true waterfall sell-off, things like we had back in the last bear market, back in the bear market in 2000, 2001, 2002. These were just stock corrections within a bull market. And sure, they're painful if you're on the wrong side of them, profitable if you're on the right side. But if we get a big waterfall sell-off, which is certainly potential, again, based on the fundamentals I laid out in the video earlier today. So then how do you do that? How do you balance? Well, okay, we hit that target day and we reversed quick. If I didn't cover, I would have gave back profits. Well, the one strategy I'll leave you with is a trailing stop. If you're in, let's say QQQ, we'll use that example. So far the trend is down, so you want to take a trailing stop would look something like this. Okay, here's QQQ on a daily. This is a daily chart. Here's our downtrend right here. Recently, you can see since this candle back here around the, I don't know, 16th, 17th, 18th, every single day we're closing below the previous day. You can see every candle, the top, the highest part. Today was close, but so far we're in a clear downtrend. So your first sign that something else may be going on would be to see a candlestick, especially a daily close up above the previous candle. And of course, then you'd want to also look at those 15 and 60-minute charts of downtrend lines. So you can set a stop at that level. And if you get into one of those waterfall type sell-offs, today would have been a good example. And I did that actually with one of my positions in IRAs. I had the SOXX. The semiconductor short, and I put a tight trailing stop. When I got the price alert that the first target was hit, we were selling down hard. I thought there might be a good shot we'd reverse. I had covered some other things and set on the rest. I'd set tight trailing stops, and including SOXX. And what happens is it hit that stop, and so I gave up a little bit. If I had just left had a limit order in at T1, then I would have been filled there and had a little bit better fill. But instead, I gave up about 1% or so on that trade. It got stopped out quickly in the reversal, and it could have gone the other way. We could have blasted right through the support level today that I showed you, that first target on QQQ, that 170 or 160.78, and continued down, and therefore your gains would have built. So you can either set a trailing stop that your broker will automatically ratchet down for you, or set a hard stop at those certain levels, like over the previous highs or over that 15, 60-minute trend line I showed you, or any of those resistance levels. It all depends on where your entry price is. Everyone's different. And then as and if your trade pans out, continue to trail those stops down until we see something that may look like a true selling climax. I still haven't seen that on the daily chart. Today, like I showed you, the impressive reversal on the 60-minute, but still just another red down day, and not anything that looks to me clearly indicative of a selling climax. A selling climax, you'll pretty much know it when you see it. There's one right there, that little doji at the end there. Okay, let's wrap it up here. Again, I'll look at the charts tonight, pour through a lot of individual stocks and sectors and everything else, and give you my thoughts. But as of now, like I said, that's it. There's this thing could still go either way. We don't have any definitive signs or high probability signs, I should say, of a reversal. Just looking at the price action, looking at the candles, and again, take what you want from the end of day rally. But that's just more of the same that we've seen lately. And the bottom line is the market continues to move lower. The trend right now, the near-term trend is down. However, when we're in the middle between support and resistance, I'm not as concerned. But now we just hit on QQQ, SPY, the semiconductors, a lot of things I'm watching. We hit support today. We reversed off those support levels. So far, and like I say, support is support until unless broken. So we could continue to rally tomorrow. And I'll watch things closely, and I'll give you my thoughts and follow up on this soon. This has been Randy Finney with Right Side of the Chart. Have a great day.